Josie. So how do you make money when nearly every asset class tumbled like they did last year?
Well, if you had cash, it would have been good. Or if you had a good money manager. Yes, last year was an unexpected event. It was like a black swan event where everything just went down through the floor. But we had some funds which still made money. If you put money in bonds, you would have made money. Also distressed assets, and also those funds or companies which lend money during the credit drought. And I think our next guest is an example of the last category, which is kind of like money lending. Back to you, Susan.
Oh, Josie, there you are with your crystal ball. That's exactly right, Josie. We will be talking about the LH Asian Trade Finance Fund, which invests in structured trade finance transactions. Also, these repurchase agreements, and this $60 million fund has made money in every month since its inception back in September 2006, and its net returns after fees were about 8% in 2007. It even made money last year, 6% in fact, and its target returns of about 5% this year. Now, the fund is managed by Singapore-based Eurofin Asia, and the company's managing director, Christian Stauffer, joins us this morning from Singapore. How are you, Christian? Thank you so much for making time for us today. Let's talk about these returns for your fund, shall we? 6% last year, despite the rest of the markets going down. I mean, it's not exactly huge returns that we're talking about.
No, it's not huge return, but I think that's one of the particularity of trade finance. I mean, trade finance is not a strategy where you can really seek for superior returns, but at the same time, it's a strategy where you can protect yourself for big downward returns, such as last year, for example, in most of the other class of assets.
Okay, so your fund is targeting 5% returns this year. Why would an investor be interested in putting money into your fund when they're seeing maybe 50% returns in the stock markets elsewhere, including emerging markets?
Well, I think it's basically a link to the fact that you need to look at a bigger window of time. We're 5% this year, but if you look at our performance over the last 36 months, you'll see that the fund has been returning about 20% compound return over 3 years. It is not, trade finance is not a strategy where investors come into looking for superior returns. They really come into trade finance for the limited downsides. And it's an alternative to cash in a way, in the sense that today, I mean, putting your cash in a deposit account will be pretty much of a zero yield.
Okay, well, let's try to explain what trade finance funds do. Basically, it's pretty much similar to a merchant bank, wouldn't you say? Because you provide financing and then you charge borrowers an interest rate for their trade-related activities, from warehouse to import and even export transactions. But what is the risk in all this?
Absolutely. I mean, trade finance may have different shape. In what concerns the fund, basically we are financing short-term working capital to operators in Asia who are mostly traders and producers of natural resources, raw material. So we're financing the quantum of their working capital needs. Therefore, we're doing a small part of what a commercial bank does, and putting that into a fund. So we're basically lenders, and the way we derive return is mostly from.
Yeah, let me just jump in here. You just mentioned that correlation or that similarity between your trade finance fund or trade finance funds in general and a bank. But why would borrowers choose to go to you and a finance fund over a bank?
Well, I think it will remain definitively a banking market overall. I mean, in the world, I believe that banks are covering 85–90% of the needs of trade finance overall, and the rest of the 10–15% is shared more and more by funds, by specialized funds that we are, by macro funds, by insurance company, and I think there is a true operators are seeking for diversification more and more. I mean, it used to be probably close to 100% banking business, and it's now opening up because, as we have seen in the last 18 months, I mean, the likeliness of banks not being able to sustain the level of liquidity is still there.
Okay, so quickly, we have about 40 seconds here, but you don't employ any leverage. How is that possible?
We don't employ any leverage. I mean, that product has been designed purportedly to be a very low risk, very low volatility product, and also the limited upsize on the return.
Okay, Christian, nice talking to you this morning. Christian, the staffer of Eurofin.